If you are looking for the heartbeat of the artificial intelligence revolution, do not just look at the chips, look at what keeps them from melting. Today, we are going to look past the hype of the semiconductor rally and focus on the physics of the future. We are analyzing Vertiv Holdings, ticker symbol VRT, based on a comprehensive review of their financial filings from their public listing in 2020 through the latest Q3 2025 earnings report. We are witnessing one of the most remarkable industrial turnarounds of the decade. We are not just looking at a hardware manufacturer. We are looking at the company that is solving the thermodynamic limit of the digital age. In this deep dive, we will deconstruct how Vertiv transformed from a struggling SPAC merger into the operational backbone of the global data center economy, and why their aggressive push into liquid cooling positions them for a growth super cycle through 2030. To understand the magnitude of the opportunity, we first have to understand the journey. If you look at the 2020 and 2021 annual reports, Vertiv was a company with great assets but operational friction. They had just spun out of Emerson Electric and were finding their footing as a public company. The 2021 and 2022 reports show the scars of supply chain disruptions and inflationary pressures. Margins were squeezed and the market was skeptical. But the narrative changed dramatically with the appointment of Giordano Albertazzi as CEO. The 2023 and 2024 filings reveal a relentless focus on operational excellence. They didn't just sell more, they fixed the machine. They streamlined manufacturing, improved pricing, power, and culturally pivoted to a high-performance organization. Now let's fast forward to the 2025 data. The investor presentations from Q1, Q2, and Q3 2025 tell a story of acceleration. In the third quarter of 2025, Vertiv reported organic sales growth that is outpacing the broader market. But the most critical metric is the adjusted operating profit. It is expanding faster than revenue. This is the definition of operating leverage. Why is this happening? Because the world has changed. The rise of generative AI requires graphical processing units, or GPUs, that run hotter and denser than anything we have seen before. Traditional air cooling is reaching its physical limit. You cannot simply blow cold air on a rack of Blackwell chips and expect it to work. You need liquid cooling. Vertiv's 2025 filings highlight their leadership in thermal management. They are not just selling air conditioners. They are selling comprehensive liquid cooling infrastructure, direct-to-chip cooling, and rear-door heat exchangers. This technology is no longer a niche science project. It is the prerequisite for the next generation of data centers. The pipeline and backlog numbers in the 2025 reports are at record highs, driven by hyperscalers, the Amazons, Microsofts, and Googles of the world, who are frantically building capacity to train their AI models. We must also discuss the power side of the equation. AI doesn't just need cooling, it needs massive amounts of stable electricity. Vertiv's uninterruptible power supply, or UPS, systems are the final line of defense against power failure. The 2024 annual report emphasizes the convergence of power and cooling. As data centers consume gigawatts of power, the efficiency of that power delivery becomes a massive cost driver. Vertiv's high-efficiency systems are not just hardware. They are an operational expense solution for their customers. Let's analyze the financials for the long-term investor. The balance sheet has been fortified. The leverage ratio has come down significantly since 2020, giving them the flexibility to invest in R&D and strategic acquisitions. The guidance provided in the Q3 2025 presentation suggests that this is not a one-year spike, but a multi-year tailwind. They are projecting sustained growth into 2026 and beyond. Because building a data center takes years, the orders placed today are for facilities that will come online in 2027. This provides visibility, a rare commodity in the tech sector. So what is the verdict? Vertiv is effectively a pick and shovel play on the AI gold rush. But unlike the volatile software companies, Vertiv deals in physical infrastructure. You cannot download a cooling system. It must be built, shipped, and installed. This creates a moat. The transition from air to liquid cooling is a complex engineering challenge, and Vertiv has the installed base and the service network to lead it. The volatility in the stock price reflects the market, trying to price in this new paradigm. But the underlying data shows a company that has fixed its internal issues just in time to catch the biggest external wave in history. For the patient investor, Vertiv represents the industrial logic behind the digital dream.